Let's talk about stop placement, which is essentially trade management. All right. So we're going to go through the key list. And this is what I do the evening of or the evening before or the morning of the market open. Okay. We're just going to go through the key list. So I take it and I'm going to look at it like this because this is what we were looking at yesterday. And we've got a trigger price on this of 93.50. So 93.50 is up here above these topping tails. And so when I look at this, I evaluate where would my stop have to be to take this trade. And I evaluate it from the point of, am I going to put a buy stop on this or am I going to put an alert on this? I've gotten more accustomed to doing alerts recently. I haven't really done alerts. I'm just more kind of a buy stop and with the first triggers OCO kind of thing. Which means if you're not familiar with that, it just means that a first triggers OCO means that when the first one fires, so the buy stop fires, then two other orders become active. One is a sell into strength and one is a stop. Okay, so, and whichever one fires, the other one cancels. Okay, one cancels other or order cancels order, whichever way you want to look at it. So when I look at this and I see this trigger price up here at 93.50, I think, well, what I'm going to have to do is I'm going to have a stop to at least eliminate half my position down here at 87.50 roughly. Okay, so from 93.50 to 87.50, it's a long way. I'm not real jazzed about that. Okay, which is why I did nothing with this today. Could it work? Possibly. I mean, I'd be more inclined to do something like this if the market was much stronger, but it's still trying to digest every single syllable that every single Fed member and former Fed member has ever said. It's just tough, right? That's what the market's trying to do right now. Figure out what this all means. So I took a pass on this, but I would have had to put half of it here at 87.50 or so, halfway through this bar, and the other half down here at 82.50 or somewhere in that range. Okay, too much risk for me. Just I'm not interested in that. So let's go on to AR. And you have to zoom in so I can back up a day. There we go. So this is what we're looking at yesterday, topping tails. And I'm not all that jazzed about topping tails. You're going to find through this video, you're going to find me saying a lot of things like, I'm not real jazzed about this market. I'm just not. It's just not that. It just doesn't have a strong propensity to go higher. It's trying to figure it out. Now, that doesn't mean there aren't opportunities out there, but this I just wouldn't look at as one of them with the topping tails. I mean, it would have to be such a small position for me to get into with a stop somewhere down in here, okay, which isn't that far away. I just not that crazy about the action. Now let's see, was I right or wrong? Let's go ahead and take a look. Yeah, see, it just pops and drops. You know, I don't know if it triggered. Let's see if it did trigger. The high on this bar is 32.33 and 32.33. So it did not. The trigger price was 32.70. 32.70. So it did not trigger. Okay. Let's go on to CNX. CNX. Take a look at yesterday. There we go. So this is what we're looking at. Downward sloping trend line. Trigger price is 21.40. You know, this would be something that I would look at if the market was a little bit better. Okay, told you I was going to say that a lot. And resources have been good to us. I mean, we were in things like this that have moved like this. And so I look at this as a pullback setup, of course. And will it take off? It might, but I'm going to just wait for the market to get a little bit shaken out here a little bit and decide to make more of a move. It's like this morning on the the futures where jostling around, and it's just indicates it's just going to be a choppy day. So what do? We sold off. Interesting. Okay. So take a look at Silver Bow. Silver Bow. All right. Another big tail on top, big tail on bottom. And we've got a entry price, trigger price of 36.90. 36.90, just barely triggered. Okay. Barely triggered and then had a tendency to pull back. So tough. I'm sorry. I backed it up a day. So this is what I'm looking at. Is that right? Did I back it up? I did. Okay. 36.90. He's got as a, so he's 2 cents below the high. I don't know why that is, but nevertheless. Okay. So, 36.90 is the trigger price on it. I would have to put my stop down underneath, at least down underneath this real body, down under here. So that would have been the first stop, and then the rest of it would have been down here under the tail. Okay. Take a look at Kroger. I did get into Kroger this morning and got out almost as fast. Let's go back and look at this. There we go. Okay, so the trigger price is up here at 59.20. Okay, and I did have an alert set, and it did go off, and I did go ahead and buy it. There was volume coming in. Let's go ahead and look at it in a lower time frame and see what that volume looked like. Yeah, so there it was in that first bar. Okay, and so that was buyable. Okay, and I was in it. But when it goes all the way up here and pulls all the way back on a topping tail, I sold half of it in here somewhere, and when it did this and came back down near my buy price, I'm gone. So made a little, very little on the trade, but I'm out. Now, could it come back course of the day and take off? Sure. But where my stops were, I mean, I was just running it really tight. And again, it's a function of the market. It's a function of, I know how quickly these things can capitulate. So I'm going to be selling it, especially when it goes all the way up here. And of course, when it's up here, where are we? Emotionally, we're warm and fuzzy. It all looks good. Everything's right with the world. Our trade's going in the right direction. But then when it comes back down and puts in this big topping tail, and I'm on a 15-minute chart, I'm going to start pairing that off. I'm going to start pulling that some of that risk off. It's getting close. Great entry, right? Great trigger price, and it worked. But to hang on to it longer term, the market's just not allowing me to do that. ATI. Let's go back out to daily, and let's back it up a day. So this is nice and tight. I like this. I like that it's coming off the 8. I like that it's, the rising 20 isn't far away. That's good. All that stuff is good. I just got an email from my buddy Jeff on on the Croc story. He says, I heard you tell the Croc story. All right. So the action is good on this. Tightening pattern. We've got it tightening here. In fact, let me just draw these lines real quick. Let's go here. And let's grab it. And let's go see, we've got a tightening pattern that's happening here and there. Okay. So what happens when that kind of thing happens? If you heard me talk about it earlier this week, I think it was earlier this week, I was talking about the semis, and they were doing something very similar. It's inside day, right? Okay. This is an inside day of this. So the tendency is to break out one way or the other. Don't know which way. We have a propensity because we're all typically bulls, but we want it to break out typically to the upside. Okay. So I like this pattern. I didn't do it probably because I got Kroger first and I did that one, and I'm not going to take a lot. When I set my buy stops, or when I put my little dots next to the ticker prices on the key list that I print out and have on my desk, I've got little marks on there that say, I'm going to do this one, I'm going to do this one, but I'll do between 0 and 3 typically. I mean, I'm not going to load up on, and in this market, I did 1, and it was Kroger. So, on this, it's nice. I like it. It's really good. So the pattern's nice. 28.20, 28.20, right up in this range, right there, 28.20. And my stop, I would have sold half that it came down here at about, with about a 50-cent risk, and then sold the rest probably under this body. My first stop would have been here. It would have been set up as an OCO after the first triggers, and I would have sold half. And when that triggered, I would have put in another OCO which would have been underneath the low a day, somewhere here around 27, probably around 27.20, probably another 50 cents, right? So it had a whole dollar risk in the trade. Let's see what it did. And it sold off, okay? It tried to go, but then it's selling off. Where's it bouncing at? Right off the 8. Okay, so if it continues to track sideways and that 8 just kind of tracks along there, it may get a lift, especially when this 21 starts to catch up to it. Okay, it's good. I like the chart pattern. Okay, I like the overall chart pattern. Lockheed Martin, of course, we were talking about this in the live session. It has a trigger price of 457.60, 457.60. So right up in, I won't be able, there it is. Okay, so that's it. Where would my stop be on this? If I got in at 457.60, again, I'd have sold half of it. If it came down into this range, see, I wouldn't have done this. The risk is just a little bit too much. I'd like it more on candles that are tighter. Now, this isn't exactly the greatest pattern in the world, but these bars are a little tighter, so it gives me less room, right? I can put a stop out there under low a day and have less risk in the trade. So I look for things like that. I like tightening patterns. Just know that, it's a volatility contraction when you've got bars that get tighter and patterns that get tighter. Okay, the volatility is reducing, and that's what we're looking for. That's always a benefit. One moment, please. And we're back. Pat's going to make a mid-morning market perspective video. All right, we'll do a couple more here. And then if you have questions, just let me know. We won't go through the whole key list. So this is what we're looking at yesterday with a trigger price of 466.50. 466.50. So right in this range right here, 466.50. And so my stop would have been Midway, so about $6 away, and then the rest of it would have been down here another $6 away, right? So bigger risk on bigger stocks. Obviously, you got to give them more room to move, and got a little bit of a pickup in volume from yesterday on this. This is looking okay. Something like this might later in the day break out again. It might be a continuation, and it may end up working. So what I'll do is I'll put an alert on there at under that price, under that trigger price, and see where it goes. Oh wait, I gotta go out to the next day and see what's going on, don't I? I've already backed up, or did I? Okay, this is what I was looking at. Yeah, I had already backed up. You get a phone call in the middle of these things, it screws up your train of thought, doesn't it? Okay, so 466.50. It might have a tendency to continue today. The volume isn't as good as I thought it was. I was looking at the wrong day here, but I see what we're doing now. All right, so just one of those things that we'll just see how the market shakes out. All right. ADM, we'll do ADM. Archer Daniels, see what this trigger price is at. 93.40. 93.40. So we're right up here, 93.40. And my stop would be about $1.50 lower down here around 92.25. And then again, the rest of it I would sell under low a day. Now that doesn't mean that if the market is selling off, I might exit the entire position. I guess I should put this in there too. When I use my buy stops, when I use a first triggers OCO, I'm not always right in front of my computer when it fires, but I'll come back and check. And if it has fired, what I'll do is I'll look at the trade, I'll look at the stock, and I'll look to see how it's acting. Take it down to a 15-minute chart and see what its technical points might be. And in this one, see, we're breaking down through the 50 on this today. So I would look at that as a negative. So I might eliminate that trade right then. I do trade lower time frames as the trade is when the trade is new. So in other words, if I get into a trade at on this, what's ADM's trigger? ADM is 93.40. So if I were to get into this thing at 93.40, and I might not wait until it comes down mid range in this previous day, down to this 92 and a quarter or so. If it starts to do this, it starts to sell off hard and break down through a technical point, say the 50 MA on a 15-minute chart, I'll exit that position. Now, once it starts to pull away, once it's up into this range where I've got some room, a little bit of breathing room, I'll switch over to a daily and I'll monitor it on a daily. But until it gives me a little bit of cushion, yeah, doggone it, I'm gonna manage that on a lower time frame. I'm gonna keep an eye on it and see what it's doing, right? I wanna, because and I use 15-minute charts for those of you who don't know. I don't typically switch from 10 to 30 to hourly. I typically just use 15 minutes, and I get asked why, and it's just because I've done it for so many years, and I'm accustomed to seeing them. In fact, somebody had me make a video on something the other day, and I switched down to a 5-minute chart trying to make a corresponding analysis to it. I had a hard time doing it because I'm not accustomed to seeing it on different time frames. I like 15 minutes. You find the trader does what he does because he's done it for a long time. Okay, so I'm just comfortable with that. So on this, I would have been out intraday under that 50. And then as it regains it, you think, oh, well, you made the wrong move. Well, maybe. Well, we'll see on that. I'm much quicker to cut losses given the current market conditions. Much quicker. You have to be, right? I don't give stuff a lot of room. I mean, Pat doesn't give stuff a lot of room, and I've never heard him say in the since 2017, as many years as we've been working as closely as we have, I've never known him to have something run away. It just doesn't. Now, does that mean that he sells something and it turns around and goes higher and misses it? Yep, sure does. Absolutely. Happens. But I'd much rather have that than be hanging on to something that is doing like this. Something like this. Okay. I mean, if you bought this here, okay, on this breakout, and it could have been bought, right? Okay. I did enter this the other day, and I thought, this might be Twitter's big shot, right? This could be it. Elon Musk having control. The guy, he's a phenomenal entrepreneur. So who knows what it could do? But I was bullish on this, but I didn't give it much room, right? I sold some into strength, and the next day I was kind of happy when it got up here, but when it came back down here on the daily, okay, because I gave it some room, right? On the 15, I'll show you the 15. So much easier to talk about trades that you actually did, right? There's more detail in them then. So when I got into this thing, I've lost my day. This is it right here. So when I got into this thing, I rode it all the way through to the end, all the way at the end. Okay, it tracked up the 8, so it didn't violate any of my rules or sensibilities to hang on to that throughout the course of the day. Then the next day, okay, gaps up and then starts to sell off. And when it hit this 50, I was definitely tracking with it in through here. Had some alerts set on it to reduce my position size. And as it sold off into the end of the day, I reduced my position right in there. Okay, sold some into strength. This is on 4-5. So let's go back down to a daily and see what it did here. Okay, so this is 4-5. And as it sold off toward the end of the day, I was reducing my position right here. The next day, when it gapped down, I was gone. Okay, for a profit. But I managed it in a lower time frame until I got some room. And then the next day, of course, I switched over mostly. I did track it on a 15 because it was selling off during the course of the day. But then at the end of the day, I looked at it and said, you know what? It's closing at the lows. It's closing near the lows of the day. I'm going to reduce that position. And the next day, when it gapped down and opened up around 50, where did it open here? Opened at 50.04. Yeah, I mean, it was just a few minutes later and I was out. I don't know if it went down from the open or went up, but I just thought, you know what, it gapped down. I'm gonna be gone, and that's how I manage them. Now, had it not gapped down, had it gapped up a little bit and started to rise, I would have hung on and just stayed in the trade and managed it on a daily chart. Okay, but I manage them on a 15-minute until I've got some cushion. So, and I'll close with that. If you guys have any questions, just let me know and I'll try to do my best to help you.